Hi everybody and welcome to the weekly Forex Outlook with myself, Kathleen Brooks, Research Director here at Forex.com for the week beginning Sunday the 21st of April 2013. Well, we had a very interesting week last week. Risk was most definitely off. We had that huge move in the gold market, and the moves that we saw in gold, that we've seen in stocks, they haven't been able to extend their recent rallies. Instead, they were declining quite sharply at some points last week. That really will dictate how prices react this week. Now, there is more very important fundamental data coming out, not just from the US, who will release its Q1 GDP. But Q1 GDP will be released in the UK, and we get those all-important early April numbers, the PMI numbers coming from the Eurozone. So all very important data. Fundamentals really could be king as we start this week. But I want to show you the gold price, because obviously that 150-day dollar drop in gold last Monday is still on everyone's mind. There's a lot of talk about the changing dynamics of the gold market, the fact that it's now largely dominated by ETFs who could potentially cause it to become more volatile and more stock-like. That's going to be important. But as we ended on Friday, gold was in recovery mode. So that gold had followed stocks higher and was recovering. It was above $1,400 in the middle of the London session on Friday. A 38.2% Fibonacci number, remember, retracement of the down move from last Friday, or from the Friday before the Monday sell-off, to the lows that we reached on that Monday. So those lows that really tried to touch 1,300. That was a 38.2% retracement above 1,400 there. So that's where 1,425, a lot of people's eyes will be on that, and it'll be really interesting to see how the market reacts as we get to that level. Will it go above it, or will it trigger some selling interest? Now, we tend to think that gold will probably move at a lower level or trade at a lower level. We don't see it getting back above 1,500. However, we are willing to change our view if we get above 1,455, another massive resistance level there. So some key levels coming up in gold, and you keep them in focus if you are trading the precious metal. As we get close to 1,425, that could offer some opportunities to go short as it attracts some selling pressure. Now, the other thing that was in focus was dollar yen. That was also very volatile. Now, this is the daily chart here. As you can see, we had dipped below 97 at one point earlier last week, but then we did manage to climb. Good recovery towards the end of the week. That was led by the G20 meeting. And they're not going to put pressure on the Bank of Japan to change direction. So what we've seen here is a dollar yen on Friday rally back above 99. However, it is getting a bit stuck ahead there of 100, which is the key resistance level. We are watching it very, very closely. All eyes are on 100, but we think we're going to need another fundamental driver, and that driver may come from the US. We get some important economic data out next week, not least that GDP report at the end of next week. The market expecting a big rebound in Q1 relative to Q4, with 3% annual growth from 0.4% at the end of 2012. We'll be looking for that. Obviously, any negative surprise in the Q1 GDP could push dollar yen further away from 100. However, if we get 3% growth or above, that could be really what could sell-offs in dollar yen. We are finding buyers, and the sell-offs have been shallow. But overall, good luck trading this week. Watch out for those things that we mentioned and all that fundamental data.